This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's refinery output fell 3.3% in April from a year earlier, the first annual decline in 20 months, as large refiners carried out regular maintenance and small independent plants curbed production due to thin profit margins. Refinery throughput was 58.79 million metric tons, according to data from the National Bureau of Statistics, (NBS), on Friday, equivalent to 14.3 million barrels per day, BPD. That's lower than 15.09 million barrels of oil per day in March and 14.45 million barrels of oil per day for the January to February period. The 3.3% fall was the first year-on-year decline since August 2022, according to Reuters records of NBS data.
Oil prices settled about 1% higher on Friday, with global benchmark Brent crude recording its first weekly gain in 3 weeks, after economic indicators from the world's top two oil consumers, China and the US, bolstered hopes for higher demand. Brent settled 71 cents higher, or 0.9%, at $83.98 a barrel. US West Texas Intermediate crude, WTI, gained 83 cents, or 1.1%, to $80.06. For the week, Brent gained about 1%, while WTI rose 2%. China's industrial output rose 6.7% year-on-year in April as a recovery in its manufacturing sector gathered pace, pointing to possibly stronger demand to come. China also announced major steps to stabilize its crisis-hit property sector.
Moving on to the top news in the energy sector.
Britain announced sanctions on Friday against 3 companies and 1 individual over what it called the illicit arms for oil trade between Russia and North Korea. The announcement followed a decision by the United States to impose sanctions on 2 Russian individuals and 3 Russian companies for facilitating arms transfers between Russia and North Korea, including ballistic missiles for use in Ukraine. The sanctions highlight the joint malign efforts of Russia and the DPRK, North Korea, to circumvent UN sanctions on petroleum products, which help facilitate the DPRK's unlawful military programs, the government said in a statement.
Urals crude discounts to Brent narrowed amid softening freight rates for key routes from Russia's western ports to Asia, while outright prices for the grade dip in line with the global oil market, traders said, and Reuters calculations showed on Friday. Freight rates for Aframax ships, which usually load some 720,000 barrels of Urals crude in Primorsk or Ust-Luga for a one-way voyage to Indian ports, eased to average some $7 million from some $7.5 million for April and March loading cargoes, 2 sources said. This is still above $5 million for the voyage last September. Rates for Suezmax tankers, which usually load some 1 million barrels of Urals in Novorossiysk for delivery to India, eased by some $0.25 million to some $6.5 million per voyage, the sources added. Next, we have the top news in metal markets. Industry group European Aluminium has stepped up its long-running call for the European Union to expand its sanctions regime on Moscow, saying the EU could live comfortably without major Russian aluminium products. Russia's Rusal, the world's largest aluminium producer outside China, said the main victims of such measure would be the European consumers. It's getting harder and harder to justify the continued exclusion of aluminium ingots from the scope of EU sanctions on Russia, Paul Voss, Director General at European Aluminium, said in a statement on Friday.
Gold prices, aided by China's stimulus measures, looked poised to clock their second consecutive weekly gain on Friday on renewed hopes for US interest rate cuts, with silver breaking the $30 barrier to hit an 11-year high. Spot gold rose 1.5% to $2,412.83 per ounce by 17:45 GMT, closing in towards an all-time high of $2,431.29 hit on April 12. U.S. gold futures settled 1.3% higher at $2,417.40 per ounce. Gold is moving higher despite an UPTICK in the dollar and yields. I think in this instance, China stimulus has helped as we're also seeing other base metals do very well, said Bart Mellick, head of commodity strategies at TD Securities.
We will now look at the top news in the agricultural sector.
The condition of French soft wheat crop steadied at a 4-year low last week while maize planting accelerated. Data from Farm Office France Agri showed on Friday, after a warm spell helped rain-soaked fields dry out. For soft wheat, 64% of the crop was estimated to be in good or excellent condition by May 13, unchanged from the previous week but down from 93% a year earlier, France Agri said in a cereal crop report. The score was the lowest for this time of year since 2020, when crops were also set back by heavy rain during planting.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.